Jonathan Golub, Chief U.S. Market Strategist at UBS, is with us here in the studio. And he is, you're not terribly uncertain, are you?
No, I don't think so.
Let's talk about, there was a lot to be certain about recently because you got the elections done, you got QE2 and all the details out there. But Carol and I still have been pointing out the last couple of days, you still need to be uncertain about the European debt situation. And it looks like it's getting worse and worse just from Irish debt spreads, right?
Well, I mean, there's a good story and a bad story here. First, it's a reminder that there are macro risks that are out there. But what's really interesting, different now than at the beginning of the year, was, with the economic data so much stronger than it was earlier, and with QE2 and this belief by equity investors that the Fed is standing behind the market, equities continue to power through this and are really, incredibly resilient.
But, the market isn't always right. Certainly the equity market. They can be late to the party. I mean, is the equity market wrong in kind of continuing its charge ahead, if you will?
At some point in time, if things go badly, that's always a challenge for stocks. But right now, if you look at the environment, in the U.S. equity markets and the things which directly impact it, which are earnings, a recovering economy, the backdrop in terms of monetary policy, the market is showing to be incredibly resilient in the face of this.
I wonder. You were spot on with your last prediction that the S&P would rise to 1,000 or 1,100 by July. Where's your next target?
Well, we don't have a formal target out yet, but if we look out over the next 12 months, which is really the key issue, I think you're going to see a market that is, high single digits or better. And I guess the real way of putting this is either we're going to have a good year next year or a great year next year. A good year would be that there's macro risks are out there, which keeps multiples in check, but that earnings are great. And that's kind of my base case. The super year next year would be that earnings show up, but some of these things we're talking about in terms of budget deficit concerns and the like, if those get addressed, if we see positive news on the long-term macro issues, then you get multiple expansion on top of good earnings, and that's the real potential upside for the market next year.
All right. Also joining us now from the Chicago Board Options Exchange, Andrew Keene. He's an independent trader. Andrew, I want to kick it out to you because we had gains and losses on the day. Overall, little change. Anything significant in terms of the activity we saw or lack thereof?
I mean, yeah, there was little change, but if you look at the way the day traded, it's another very bullish day. We were down a lot this morning. The SPUs were down. They got down to 1201.75, tested around the 1200 level, and then we went straight up from there. It seems that every time that we go down, it's a buying opportunity. The market just continues to grind higher. Economic data is good. Earnings have been good for the most part, and jobless claims were good this morning as well. So, anytime we go down, it's a buying opportunity. I thought we were going to have a correction when QE2 came out. We didn't have a correction at all, and we just continue to go higher, and I think we're going to continue to go higher throughout the year.
Hey, Andrew, it's Adam. 1218, we are below that kind of magic 1220, 1222, so can we get through it?
I definitely think we're going to go through it. I think we're going to go to 1223, 1235, 1270. I think we're going to be at 1300 by the end of the year. You've got to trade what's in front of you. And the fact of the matter is, when we go down, there's always buyers. Every time we go down, the SPUs go down 10, 12 handles. There's always buyers. There hasn't been a correction. There hasn't been 2 consecutive strong down days. So you got to trade what's in front of you. And that is saying the market's going to go higher.
Are you as bullish, Jonathan, as Andrew sounds?
I hate to look at this technically over the next 6 weeks and make a bullish call. The incoming economic data does keep coming in better than expected. More than three quarters of the data is beating. You saw that today with the weekly jobless claims. So the push is clearly up. The question, it's interesting. The market is, however, responding a little bit less optimistically every time there's a new piece of good news. The market's getting a little bit exhausted, with the incoming data. So I wouldn't be surprised if there's a little bit of a pause. But if you look further out, 6 months, 12 months, it's all about earnings, incoming economic data, and that's all very positive.
Hey, Jonathan, I'm also curious about how much it's going to be about policy. We were talking earlier about the findings of the Deficit Cutting Commission and their recommendations. Do you think that there's actually going to be something done on the deficit over the next 6 months and that could help stocks as well?
I think it was Jeff Applegate who talked about this earlier. I think this could be a huge positive because what really is concerning, and Matt, you were talking before, is this about the unemployment rate? I don't think so. I think what's keeping multiples lower is long-term issues issues, the deficit, government debt, things of that nature. And when those things start to get addressed, they don't even need to get addressed. It's just that people need to be confident that they will. I think it unleashes the market, and that's the difference between good and great, and that's where I think we are.
All right, and we're going to be distinguishing whether these are good or great numbers from Cisco. They're just crossing first quarter adjusted EPS of 42 cents a share. That compares with an analyst estimate of 40 cents. So beating here on the EPS number, also coming out with some other metrics. Jules, I want to throw it out to you.
Well, indeed, here we are seeing the company come in ahead of estimates. This is largely what analysts had been expecting, that the company would be in line to slightly ahead. I think you can say that's what it is. Sales, $10.75 billion to be really precise about it. $10.74 billion is what analysts have been estimating. And as Carol mentioned, the earnings beating by a couple pennies. Now, as we talked about, really what we're going to be looking for from Cisco is what the company has to say about what's going on with the outlook. So I'm looking here in the statement to see what John Chambers has to say. Thus far, not seeing a lot of commentary, if you will, about what's going on with the economy. So that's something that people are going to want to know about from the conference call for sure, and they're going to be trying to get some information on that particular front. Also, people might be curious to know a little more in specifics about what's going on with the dividend. Cisco has said that it would pay a dividend, bowing to pressure from investors, but they didn't say how much it was going to be, because Chambers has been pushing for various things like getting rid of the tax on repatriated profits, and that there could be some commentary on that front that then might have a bearing on the dividend. Just quickly want to mention the gross margin equaling about 62.8%. It looks like that is short of the 64% that I saw estimated by various analysts. So as you can see, that's one of the things that might be pressuring those shares in the after-hours session, Carol.
All right, and you know what did catch my attention, Jules, and I'm just looking at that press release from Cisco. We did have John Chambers say, you know, Cisco delivered solid financial results during a challenging economic environment. I mean, Jonathan, we are continuing to hear from CEOs that it's still tough out there.
What's interesting is you're hearing that in the tone, and then when you're seeing the numbers coming in, and 80% of companies are beating the estimates when they finally arrive. So, you know, you can listen to the tone, or you can listen to the numbers coming in.
Numbers isn't a tough game for corporations, is it? Especially if you're looking at the bottom line.
But you're seeing decent revenue numbers. The economic data is again, it's coming in better than expected. So my expectation is probably the next 2 or 3 quarters we're going to see beats. It's going to be stronger in cyclical sectors. It's going to be stronger in tech. And I think that's going to be an important story. So I kind of disagree a little bit. I think that the numbers are coming a little fast.
You can disagree wholly with me if you like.
Disagree.
I'm just saying, look, what are we looking at? 76% of S&P companies that have reported now have beaten. I mean, is that really something abnormal? It doesn't seem so. Every quarter we report this. And also, are earnings estimates for 2011 going up, or are they on their way down?
Well, first, I think analysts are underestimating the numbers. So part of the reason that I think that you're going to continue to see beats.
That's what they do for a living.
Underestimate?
Yeah.
You know, it's interesting. On the revenue lines, they're smack on and do a great job. What they've missed, if anything, is that cost maintenance is coming in much better than they think. Normally, you have, as you get this late into recovery, the companies start to loosen up on expenses more. They're keeping expenses tight. It's going to push margins higher. And I think that's going to be one of the real big surprises is the margin line is going to improve more than expected.
Hey, Andrew, you know, I'm just wondering, you guys, when you come in the morning, you know, what's the kind of the first thing you look at? Is it what the dollar's doing? Is it what's coming in over from Europe, whether it's Ireland and the other countries over there? I mean, what is it that kind of you look for first?
I mean, yeah, the main thing is I keep an eye on is the dollar, obviously, and obviously the dollar's the relationship with gold, silver, and all the commodity stocks. So I look at the dollar, I look at gold, I do look at the FXE, which is the euro as well. You know, the euro's actually been down the last couple days, and you know the market's kind of sat still. So there are still some European problems that we have to worry about. They're kind of in the back burner. You know, it's some of the smaller countries like Ireland. It's not the bigger countries, you know, like in Italy or Spain or even England. But that is what I look at. I look at the dollar, I look at the euro, and I look at gold every day. And I also look at the VIX as well. You look at the VIX today, you know, we're up a little bit. The VIX was down a half. You know, until the VIX goes above this 20 level, I think we're just going to keep cruising higher.
Yeah, down about 3% today. All right. We got to run. Hey, Andrew, thank you so much. Andrew Keene over at the Chicago Board Options Exchange in studio. Jonathan Golub, thank you so much.